On 31st January, RBI has banned Paytm Payment Bank to conduct transaction after 29 February. So if you are a Paytm user who uses Paytm wallet to make payments on purchase of any product or recharge your phones or make bill payment, then you can't use Paytm wallet after 29 February. You can still continue to use the Paytm app, but you won't be able to add money or accept payment in your Paytm wallet. This is a major blow in Paytm's business that resulted in two back-to-back lower circuit of 20% each and today 10% lower circuit, resulting in more than 40% fall in Paytm share price in last 3 trading days. Basically, Paytm has lost a market cap of nearly 20,000 crore in just 3 days. This created a lot of question around the future of Paytm. Hey everyone, Paytm has been a poster boy of Indian fintech ecosystem. I still remember those demonetization days towards the end of 2017 when government banned 500 and 1000 rupees note to curb corruption and black economy. Paytm was one of the largest beneficiary of that, which resulted in its meteoric rise. Overnight, people started accepting Paytm that included the smallest of fruits and vegetable vendors. As a result, Paytm valuation skyrocketed and eventually launched its IPO in November 21 at 2,150 rupee at a staggering market cap of 1.4 lakh crore. However, since then, company is facing a tough time, and recently after the RBI ban, its share price has fallen more than 40%, resulting in a total of 75% fall from IPO price that has created big hole in investors' pocket. Now it has been a roller coaster ride. So in this video, I've tried to simplify the entire story in terms of what is the ban all about and its impact on Paytm business. More importantly, we'll try to understand if it is an opportunity to invest in Paytm or better to stay away. But before everything, let's first try to understand the Paytm business model so that you get a clear picture in the entire development. Again, this video is only for education purpose, so please do your own research before investing your money. Alright, let's get started. To understand the impact of RBI ban, it's very important to have a clear picture about Paytm business model. So Paytm has 3 major revenue segments: payment service, financial service, and third is marketing service that include cloud and commerce. Within payment services, Paytm enables both consumer and merchants to make payments and receive payment with a few clicks. So when you use Paytm to make online bill payment, mobile top-ups, and money transfer using Paytm app, or make online payment on third-party app and in-store payment using QR code, it falls into your Paytm payment service. This is the biggest segment for the company that contributes nearly 60-65% of its total business. Then within financial service, Paytm has collaborated with various financial institutions to offer mobile banking, lending, insurance, and wealth management services for consumer as well as merchants. Paytm mutual fund investment platform, stock investment platform, gold investment also fall into this financial service category. Now within financial service, they have a payment bank that provides a wallet option where you can store money that can be used for various transactions. You can even open a saving account, current account, salary account, FD and debit card with Paytm Payment Bank. This segments contribute around 20% in company's business. Then third category is marketing service that include ticket booking, travel, entertainment, gaming. Then it offers software and cloud service to merchants for various aspects of business such as billing, ledger, vendor management, customer promotion, catalog and inventory management. This segment contributes around 10% of company's business. I hope you got a fair idea of Paytm business model. That is not that the entire Paytm is getting closed. You can continue to use Paytm to pay your bills and make other transactions, but the problem is within their financial service segment where it offers the wallet and banking service that RBI has ordered to stop effective from 29 February. This payment bank was a small portion of their overall business, but it was highly profitable. I'll explain it shortly. For now, let's try to understand the RBI action and the reason behind the ban of Paytm Payment Bank. On 31st January, RBI banned Paytm Payment Bank from accepting deposits or top-up in any customer account, prepaid instruments, wallets, and FASTag after February 29. Now, RBI mentioned that their audit report exposed multiple compliance issues from Paytm. First biggest issue was with KYC, that is know your customer. Now, when you open a bank account, KYC is the most important aspect where you take all the required information about the customer to ensure that the bank account is not used for illegal or terrorist activities. That's where Paytm failed to do proper KYC for their customer. They opened lakhs of accounts without any proper KYC. Also, there were many cases where a single PAN was used to open multiple bank accounts. Now, in my opinion, this is a serious breach of compliance and a clear corporate governance issue. And it's not that RBI abruptly took this decision to ban Paytm Payment Bank. It gave multiple warnings in last 2 years. And I always say that corporate governance is the most important aspect while investing in a company. This corporate governance issue was also clearly visible when they came up with their IPO at an exorbitant price of 2,150 rupee with market cap of 1.4 lakh crore, where the Chinese investors and other institutional investors got a very good exit and retail investors got trapped since the share price fell down more than 75% from those IPO levels. On the contrary, look at Tata Technologies. They launched their IPO at 500 rupee at very attractive valuation with market cap of about 20,000 crore. That got rewarded big time with 140% premium on listing day because they were not greedy. And that is a big factor that distinguishes good leadership from bad. In addition to the KYC issue, there was also concern about questionable dealing of hundreds of crores between Paytm parent company 197 Communication and Paytm Payment Bank. So overall, Paytm's consistent negligence to address the concern raised by RBI resulted in ban of its Paytm Payment Bank. I think that it is a very appropriate action. Nobody is above the law. You might have created a great payment solution, but that does not mean you do not comply with RBI rules. In fact, these actions set a good example for others to ensure that they comply with RBI norms. The problem, in my opinion, is these new age companies who borrow money from big investors want to grow at a very fast rate. And in the process to grow quick, they compromise on quality and compliance. Their only goal is to increase their market cap and get a good exit to their early investor. This is certainly not sustainable. We have seen what happened with Byju's. In fact, if RBI or other regulatory authority does not take a strict action, that can have huge negative consequences on the economy in the long term. So RBI has taken a very good decision to ban Paytm Payment Bank. Now let us try to understand the impact of this ban on Paytm business. While you can continue to use Paytm for transactions, you can't make payment from Paytm wallet or from Paytm Payment Bank. For instance, when you scan that QR code using Paytm, you might have some money in your Paytm wallet. That makes it very convenient to make payment. Although you can always use other payment mode like credit card, debit card, UPI, net banking. However, Paytm wallet makes it very convenient to make transaction. On top of this, Paytm wallet and banking services were very profitable. So Paytm wallet might not be a major chunk of its overall business, but it's more profitable business, and since it is seamlessly integrated with other businesses, it would have a huge impact on its other business as well. Because going forward from 29 February, you can't add money in Paytm wallet or bank account. The bigger problem here is that let's say you scan the code to make the payment, but the money goes to the merchant Paytm wallet, or many small merchants have their bank account with Paytm. However, going forward, they won't be able to use Paytm wallet or Paytm Payment Bank. So merchants may refuse to use Paytm altogether. On top of this, since Paytm is not in the good books of RBI, it can hurt its other business as well, where the lending partners could possibly rethink their partnership with Paytm. I had a look at Paytm Latest con call where its management interacted with analysts and explained the impact of this ban. And management mentioned that in the worst case, this ban would impact their EBITDA by 300 to 500 crore rupees. And after 29 February, Paytm would only work with other banks. It can't use its own payment bank. Please note that Paytm is already working with other banks, and PPBL, that is Paytm Payment Bank Limited, is one of the other bank. However, it was a very crucial part of their business. Going forward, Paytm would have to change all the QR codes because that QR code has a VPA. That is Virtual Payment Admin of Paytm Payment Bank. So that QR code and VPA has to be changed to other bank. Of course, here the question is, can Paytm seamlessly transition the merchants from Paytm Payment Bank to other account? Apart from this, since the Paytm Payment Bank is integrated in their business model, it would impact other businesses to an extent as well. First is there are merchants that have taken loan from Paytm and using Paytm Payment Bank for repayment. There are nearly 10 to 15% of merchants doing that. So that they have to move their account to other bank. Overall, this ban on Paytm Bank is a major blow to Paytm's path for profitability, and also raises concern over the corporate governance of the company. Now from current levels, can Paytm share fall further, or now that Paytm has fallen significantly, is it a good time to take a bet? Well, in my opinion, I would like to stay away from it. If you have already invested and got trapped, there's nothing much you can do other than exit at loss or hope that someday you get a better exit price. After more than 40% correction in 3 days, Morgan Stanley has invested 243 crore to purchase 50 lakh shares of Paytm. But I'm sure that is a very minute portion of Morgan Stanley overall business. As a retail investor, I think it's better to stay away from Paytm at this point because there is a lot of uncertainty in their business. I hope you got a good idea about entire development in Paytm. If you find this video useful, do share it with your friends. And if you're looking to more such videos, you don't forget to click on that bell icon. I also have a close community of long-term investors where I share one exclusive video that includes keeping a close eye on the important events in the economy, tracking the quarter results, and latest development in the stock market. For more details, you can explore my website. I'll see you next video. Till then, take care.